Hey guys, Mark W. Flockhart with Think Insurance. Today we're going to talk about homeowners insurance and business insurance, or work from home insurance, so to speak. So we're going to go over all this COVID's happened, everybody's working from home. What type of risk am I taking? Well, it's very minimal because most insurance policies actually allow you to have business use. And what that allows you to do is very minor stuff. So sometimes it's a haircut place, which there's an addendum or a rider, as they call it, where you can add it. Other times it's just doing taxes or doing something paperwork wise or work at home wise that doesn't involve clients coming over. As always, the best way to find these answers is to talk with your local agent. If you don't have a local agent, I would recommend filling out a quote below where one of my guys can actually quote you. They work 17 different companies, yada, 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 amazing, amazing. So homeowners insurance is really simple. So when you write a policy, nobody knows this. It's actually one of the things that people don't even think about. I'll be honest with you, every time I wrote a home policy, almost every single person, I would say 95 to 98% of the people just don't care. They don't give two craps about what their home policy is as long as it covers the mortgage. And if they have a mortgage, if they agreed to it. Because the mortgage does kind of regulate that you have enough insurance to cover the mortgage. But to be honest with you, you got to be careful because they don't care. They don't care because they're going to sell that mortgage to another mortgage company in 6 months anyways. That's why your mortgages keeps changing, because they make more money when they sell them to other companies. It's a whole nother video. So your mortgage company initially wants you to have X amount of dollars to cover the loan, which is normally the price of the house or close to the value. What the insurance does is a little bit of the opposite. They insure the replacement cost, not the value. So the value and the replacement costs are two different things. We're not going to get into that today. That's actually a video that's on one of these that I'll link up there. So when they write that policy, they've got all your standard coverages, coverage A, B, C, D, E, and F, another video to watch. And then they'll go through those. But with those, they don't talk about the additionals, mainly because most people don't want to know about them. They don't want to sit down. They're doing the mortgage. They're buying a house. They're not worried about it, or they did it 5 years ago and they don't want to deal with it again. It's a pain to switch, all of that stuff. So they're not going to want to go through that. And that's where most agents do the right thing to the customer and don't explain it all or go in depth. They just send them a copy. Now, whether they actually read it or not is up to the person that's purchasing that policy, but I highly, highly doubt that you're the person that's going to go through line by line and look over to make sure that you got the right coverage. Now, you're going to look at the main things. You're going to look at dwelling A, which is your house. You're going to look at dwelling B, which is your other structures and all of that stuff. Below that, there's something called riders. And those riders are sometimes even on a third or fourth page deep where they explain all the additional benefits. When I train my guys to actually sell a policy to a customer, what we do is we always do a package, mainly because that package includes water backup. And that's the most important, in my opinion, to have because it's the number one claim in insurance. Another video on that there. Since COVID's hit and all of the work at home things have hit, a lot of people are starting to wonder and question, like, do I really have the right insurance to work from home? Well, you do in most cases. So here's where I say you need to talk to your agent, because what they're doing is most policies will cover any personal liability up to the limit that you've set. I try to do 500,000 or higher. Some people do 300, and I hope you don't go below that, especially if you're a homeowner. That coverage will cover any liability. So if somebody did stop by, let's just use, for example, my wife, she's working at home right now for a boat insurance company, and she has somebody that comes by and picks up some of the packages, some of the letters that they're printing off. They have a printer in our office, and they've got someone that she can drop off to. And so there is a little bit of moving, but let's just say in the winter that person comes by, slips on my front lawn or my sidewalk and gets hurt. Will my insurance cover that? Absolutely, insurance should be covering that because it's a liability that happens. I've got medical payments that will actually cover that first. So if it's just $1,000 doctor bill or to $5,000 with us, although you can go higher than that, that's just usually the cutoff for me because at that point, it's going to be a larger claim. They're going to have to sue my insurance and go after the liability portion. In that case, I should be covered in those situations. Well, what about all the equipment that I have and the printer and all the stuff? Well, maybe they send a computer home with me. What if that gets stolen? That's a little bit tougher. It's going to be a little bit of a fight either way you go. One, you shouldn't be filing that because if it's $1,000 or a $1,500 claim, you probably have a $1,000 deductible anyways. And home insurance is not like car insurance. It's not in some states where it's not your fault. You don't get charged for it. You file a claim on home insurance, the rates go up. It doubles sometimes. So be careful when you claim those talk to the right agent about those. I also think I have another video for you there. The piece is that you really need to know is your company that you work for is insuring that equipment. So if it's stolen, if something happens, they're usually responsible for that piece because you're not getting paid to own the equipment, you're getting paid to use it. And that's where their insurance is going to kick in and cover things like that. Always consult a tax consultant, but that's also the reason that you can't claim the space that you work in as business because you're not 1099, you're not your own business, you're working for a company, but you just happen to be working from home. That's why a lot of these companies, when you're full work from home, when it was designed that way, they'll pay your internet bill, they'll pay you they'll pay all the equipment, they'll send you everything. If a technician comes out, you don't pay a dime because they tax deduct all of that. That's on them. You're not supposed to be claiming that because you're not a contractor and you're not doing all that stuff. If you are, then by all means, write off the house, right, or the portion of the house that you use, write off part of the electrical bill, part of all of that stuff. But as far as like a company letting you work from home, that should be added into any deductions you have or any contracts that you have with them. Now, as far as those riders that we talked about, let's dig in a little bit further for those of us that have a home-based business. We're actually selling products. Maybe it's Herbalife, maybe it's Avon, maybe it's Shakely, or whatever these companies are, right? Maybe I'm actually doing jewelry on the side and I'm actually creating my own items and selling them on the internet. Or maybe lastly, somebody's coming and picking those items up. I sell them one at a time. I do a service, or I'm a tax consultant. Someone visits, I do taxes for them, and then they leave. Those need to be listed on an insurance policy. Always, always tell your agent to let them know that something like that is happening. That way, if something does happen and they said you didn't have to have it covered, but they found out later you did, it's on the agent. They have an E&O insurance, that's errors and omissions insurance, that covers those situations where they mess up and give you the wrong coverages. On that addendum, so that rider, what typically will happen is they do allow certain businesses. They're not going to allow you to have a chop shop in the back. They're not going to let you have, certain types of businesses in the garage and things like that. But they will let you store a lot of your stuff and your items in your house, as long as it's safe and it's not something that could get ruined and it's not a computer equipment piece where it's something that you can't prove like it's a program, right? You're not going to get most of those companies to cover that. They're going to cover the equipment, the materials, the inventory, all of that stuff if you've listed it on the policy as something that needs to be covered. So ones that aren't typically allowing you to do, one of the biggest gripes, and some companies do and some companies don't, is home daycares. So if you're doing a home daycare, that's actually its own separate video just because it's really a search. You've just got to look around for different companies. I believe the 17 companies that we've worked with, I want to say 7 or 6 of them, maybe even less, actually allow you to do the home daycare. So there's actually laws in place that allow you to have a certain amount of people, but once it's like you're hiring 2 people and you've got 7, 8, 12 kids, it starts to become more of you should be doing a business policy, BOP as they call it. But for the rest of you, if you're doing any type of business like that, it's really simple, it's cheap, it almost costs nothing to insure. Sometimes it doesn't cost anything, you just want to notate it on your policy and then they know that that type of business is happening. That way if something happens, somebody comes over, hurts themselves, anything that happens, someone's suing you, you've got reasons for that. Keep in mind, there's one thing that you've got to be a little bit careful about is there is a coverage for slander. So if somebody comes over and says you are slandering them or you're doing something on the internet, they're going to go after you and your business. Obviously, if you have the business separated into its own LLC and its own entity, that's a little bit separate and different, but they're still going to come after you for that piece and they're going to choose which insurance they're going to go after. So if your personal home insurance is better or looks better than your business insurance, they're going to go after your personal one because you're the one that said it. And they really can argue it both ways because it's you in either role. They're either saying you were the business guy that slandered them or you weren't the business guy that slandered them, and they can choose which one they go after. Either way, hopefully you're covered enough. Definitely, guys, if you like this video, hit the thumbs up, hit that subscribe to get more advice like this. I do also do agents training and advice on Thursdays, so those videos typically go live there. I hope you guys enjoyed this. Hope it was helpful. I will see you in the next one.